Welcome. Before we get started with today's Mortgage Minute, here's a quick reminder from Lee. Thanks, Lee. The new Fannie Mae loan level price adjustments are expected to take effect this week, so the clock is ticking on your ability to take advantage of today's low rates. Rates are lower than they ever have been, but under the current refinancing boom, it comes at a time when banks had laid off staff and appraisers are a week or two behind. Get your application together today, or you could get placed at the end of a very long line that could cost you money. Thanks, Lee. Sounds like good advice. You're welcome, Lee. And say hi to Mom. I love that guy. Interest rates continue downward for the 10th straight week, with conforming 30-year fixed rates hitting a record 4.625 at par. High limit 30-year fixed rates are at 5 1/8 at par, and 15-year fixed rates are at 4.5 at par. Great news if you're looking to refinance. However, current home values trend is making it difficult for properties to retain the value needed for refinances. Let's take a look at November sales according to DataQuick.
So the good news is the Bay Area saw an increase in November home sales of 12% year over year. The bad news is nearly half of all the sales were foreclosure related, and this caused the median home sales price to drop 44.4% for the region. Now remember, median home sales price means 50% of the properties sold for higher and 50% sold for lower. Most of these sales took place in the inland regions of Alameda, Contra Costa, and Santa Clara counties. Contra Costa home sales were up 62% due to foreclosure activity, and the median home sales price in Alameda dropped 37%. In Contra Costa, it was cut in half, and in Santa Clara, the median home sales price was down a third. Now, these are areas where these kind of prices are causing people to feel like it's about time to get back into the marketplace. That's why you're seeing a lot of these sales take place. Now, in Solano County, the sales were up 90%, where second homes and investment properties are pretty commonplace. In Napa, the values, or the median sales price, dropped 27%. In Solano, it dropped 37%. And in Sonoma, it dropped 34%. Now, the areas with the highest sales price actually saw a drop in sales volume of about 25% for these counties. The median sales price dropped 28% for Marin, it dropped 20% for San Francisco, and it dropped 25% for San Mateo. So what we're seeing from these trends is a lot more people are ready to buy at the lower price points and in the inland areas. Where a lot of people are holding off is in Marin, San Francisco, and San Mateo counties. Part of this is due to financing, part of this is due to the economy and people wanting to wait and see what's going to happen. But these are the trends that we saw in November.
So there's your update. All of these numbers are available for download on buildingwealthmagazine.com under Mortgage News. For information about purchasing foreclosed properties in California, visit foreclosuresnorcal.com. I hope this update was helpful. Until next time, I'm Lee Williams.